Alright, let's discuss the breakout trading analysis. So, the breakout trading analysis are simply boxes that are plotted correctly, will also be your basis on entries, exits, or take profits, and stop losses. It's also used for projections of your long-term endpoints of a trend, whether it would be an intraday or a scalp trade or a swing trade. So how is it done? So we have three different boxes that we need to plot correctly, and we need to be guided with some specific rules for each boxes. So let's get started with the pre-Asian box. The pre-Asian box time frame, we again are referring to Pepperstone time frame, that is 1800 to 2145 or up to 2345. The time frame is M15. It is a full-bodied candle, so we are not considering the wicks when we are plotting. Just like for this one, these are wicks, so these are excluded in the plotting of the pre-Asian box. The pre-Asian box, by the way, is colored teal. it's a bluish green color, so the maximum pips for the pre-Asian box to be valid is only up to 50 pips. But there are times that during the time frames 1800 onwards, there are high impact news, usually that comes from the US. So just like for the September 16 price action, your 1600 onwards had about 100 pip run. So we are only considering the smallest swing that happened on the movement. So we're taking this small swing here as a reference for our pre-Asian box. So that is between 2145 to 2345. So when we're going to get the total number of pips, that's only about 28 pips. Now the orange colored box is your pre-London box. The time frame for that is 3 a.m. to 7 a.m. of Pepperstone broker time. Again, it is plotted at M15, but a special consideration for this box and for the other box is that it's a full swing of a time frame. So we are considering the week to week movement. So what's the week to week? So it is the highest high or the lowest low swing points of the time frame 3 a.m. to 7 a.m. We also have the New York box. The New York box is colored pink here, or fuchsia pink. Time frame is 16:15 to 17:30. It's a full swing of the time frame, and we are also considering week to week as well. So how are we going to trade using these three types of boxes? So we are going to do a breakout and retracement trades and order block entries. Now how are we going to have a take profit of the box strategy? So let me read through and then I'll give you some examples later on. So the take profit would be 50% of the box or 100% of the box, or it is based on the order block. So as a simple overview of the order block, so if you have one swing up and one swing down, the point of intersection of two candles meeting for reversal is actually your order block, which is like this one and this one and this one. But it will be a different discussion on the next few slides, but this is just a basic overview of the order block. Now for the stop loss, it's one box higher or lower plus the spread. So now let's get started on how we are going to trade based on the strategy of the boxes. Now as you can see here, I'm just moving my boxes here. rather my price, as if we didn't know what happened on the previous day. So let's assume that this is the pre-Asian box. Now we are going to drag one box up and one box down. So as we said, whenever there is a breakout, we sell on breakout. So it reached our first safest TP would be the 50% of the box. Just like for this one, at the opening day, the price went down on a breakout, touching the 50% of the box. How would you know that it is the 50% of the box? By just double clicking the box itself, and there's a white part at the center of the box. That's the 50% of your box. Now I'm going to plot again one box up and one box down. So as you can see, it's playing within this box. And then we have formed the pre-London box. Now again, what we're going to do with the pre-London box is just double click the box and hold the control button and then drag down and drag up to duplicate the boxes. And then we press F12 to show the single movement of the box based on a 15-minute time frame. So as you can see here, there is a breakout to the upside, one box up. So we could consider a buy here, and our take profit would be a 50% of this box. I'm going to, there you go. So usually what happens is whenever the price reaches 50%, it could go two ways. It could go break on the 100% or return to the main box or at the zero level of the second box up. So again, I'm going to, now this is an example of buy and retracement. So you have an order block here as discussed. It's a point of intersection wherein there's a downtrend and an uptrend. The opposing candles together for reversal is your order block. So you enter here and then get another movement, or 100% possible, but it's not. It's only up to 50, and then it broke and the price breaks rather on the lower box of the pre-Euro box, pre-London box rather, and I'm pressing F12 again. Again, as you can see here, the price just reacted at the exact 50% of the box. So that's your safest quick scalp trade. So still consolidating. Now it has returned one box up, so the price breaks one box up. So you would consider a buy and breakout again up to this level because of this order block. And then it went down. Now forming your New York box. Now this time, your reference will be your New York box. Your New York box will be one box up and one box down. Again, pressing F12. It's playing within the box. Now this time, the price breaks at the lower part of your New York box. Again, we will consider the safest take profit of 50% of the box. So I'm going to extend the box here. And then F12. So we had taken a profit of the 50% of the lower box. And then, basically, since there's an order block here, rather, it went down. So it breaks no, it's still within the 50%, but breaks the pre-London box. Again, extending it here, and then you would consider another sell-off and a safe take profit of 100% or 50% of the box. Okay. Right, and 100% of the box. Okay, so F12 again. Now it's forming the pre-Asian box. So usually when the price creates the pre-Asian box, I would not advise traders to do trades on this session because it's a very tight consolidation. So let's move on to the next day. Now I'm going to move one box up and one box down again on this pre-Asian box. It's still within this box, but it breaks a little. But because of this order block here, the price rejected downward. And since the pre-London box is completed, we'll be using the pre-London box as a reference for the trade. So here, as you can see, the price breaks at almost 50% and now at 100% of the box. Now I would consider a sell on retracement on this area. As you can see, the price retraced at almost 50% of the box, and I'm going to duplicate one box down again. Since the price breaks this box, I'm going to possibly have my take profit here or another 100%, which happened correctly, which is here and here at the 50%. Now it's 100%. And I'm going to drag this box down again. Since there's a creation of rather the New York box, I'm going to use the New York box as my reference for the succeeding price action. One box up and one box down again. Since the price breaks above the New York box, main box, so I'm considering a buy at the 50%. So let's also take into consideration the order blocks we have, because there are times that price rejects whenever there are order blocks. So again, it plays around the 50% of the New York box, and it's still within that pre-Asian box. So for our final analysis of the day, let's move one box up and one box down again. Pressing F12. Now this time, as you see the candle here, the price breaks the main box of the pre-Asian, and I would consider a sell, taking profit with 100% or 50% of this box. So again, I'm going to extend this box just to show you that the price reached the 50% or the 100% of the box. Okay, F12 again. And then in this price action, as you can see here, the price breaks the main box of the pre-Asian, moving upward, but still within the pre-London box. I'm going to duplicate the pre-London box this time and the pre-Asian box as well, just to get another reference for my take profit. So it could be one full box or 50%, or the 50% of this box, which just happened. Then F12 again. So there is a rejection. Let's see. Yes, there is a rejection of price because of the order block on the previous hindsight. So the price breaks, returns to this 1, 2, second level of the box. Again, your take profit is 50% to 100% of the box. And same fashion follows with the pre-London box breaking below, returning to the main box, and having 100% take profit from the main box. And then it broke down again. Now this time, we're going to duplicate the pre-Asian box, or rather the pre-London box, because this one is the latest box that's happening right now. So again, you could take the 50% of this box or 100%, but the safest take profit is the 50%. Now you have the New York box happening, so one box up and one box down. Again, the rule here is every time the box breaks, rather the price breaks at the main box, you would consider a sell. Since there's an order block here and a sell on retracement, you could get 50% of the lower box of the New York box, which is here, and then it returned. So that's basically it. So this is the way you plot your boxes based on breakout. So as you can see, even as tight as a consolidation day, you will still be able to scalp based on the box trading or the breakout trading analysis. So I hope that you will be able to practice this basic principle by heart, and by simply following the rules on how to plot it, I believe that you will never be lost in trading with the use of these basic principles.